I'm Ross Gerber. I'm president and CEO of Gerber Kawasaki, and today we have Let's Talk Money.
Our favorite show.
It's our favorite show.
Episode 2.
Yeah, we've decided to do this show to really help young people get ahead. You know, there's so much going on, and there's more young people investing today than ever in the history of the investment world. And so it's so important that young people get good information. And what we're seeing online is young people are getting a lot of bad information off TikTok, off Instagram, off Twitter. And so what we wanted to do is really have a show where we answer like the kind of questions young people are thinking about, whether it be investing, trading, or financial planning, or other things like even getting married and other things. And we wanted to, pose some solutions. So we have two of our top young advisors here joining us today. We have Mia Samson, who is doing a wonderful job working with young people and building her career. And then we have Jimmy Bisharat, who is also a wonderfully talented young investment advisor who is seeing lots of young people. So we're going to get lots of questions today that we've been taking from our clients over the last week that we wanted to answer and really give you, I think, a greater understanding of the types of financial decisions and moves you can make to really improve your situation. At Gerber Kawasaki, one of the things that's most important to us is to improve your financial situation. And one of the, I think, biggest myths about investing is this sort of like gambling, get rich quick thing that's sold on the internet constantly to young people, like there's some shortcut to wealth. And what it really is gambling. There is such a difference between, it's like you watch Dave Portnoy goes on Twitter and he goes on rants because he's always trading the wrong thing and he misses Bitcoin, and because he's a gambler. And gamblers never make money in the stock market. And it's the same reason why gamblers never really make money in Vegas either. It's because it's kind of rigged against you if you're gambling. And so one of the first things I wanted to get into right now is we're talking about meme stocks, and that's basically gambling, right?
Yeah, 100%. One of the questions I've been getting a lot is how do you differentiate the gambling in the market versus investing in the market? Like, what is the difference? Because the way Mia's generation got into the market was through Robinhood.
Right, which is a gambling website that gambles on stocks. And so what Robinhood created was actually, what Robinhood really is a front for Citadel Securities. And Citadel Securities is the largest market maker and hedge fund in the investment stock market world. And what they've done is they created an online platform where young people can buy and sell very expensive options, which is typically what people are doing. And they've given you this, what they call gamification, or which is really fancy word for gambling, to think that this is a way for young people to build wealth, which it actually is not. And what if you actually look at Robinhood statistics, 50% of the people who've opened up Robinhood accounts have lost all their money and have closed their accounts.
And even recently, they ended up switching their margin loan rates to around 5-6%, which in comparison, if you're looking at what the percentage is for margin loan rates at Schwab, it's around 12%. Wow. So they're just encouraging people to borrow with their money. They're not encouraging people to invest and do research, because that's not how
and then they're
getting paid by just holding for a long time.
Totally. Well, if you just buy a stock and hold it, it's the worst thing that could happen to Robinhood, right?
Right.
And so actually what's best for you is what's worse for Robinhood, and what's worse for you is what's best for Robinhood. And that's what I see. The biggest scam about Robinhood is them saying they've democratized finance for the average person. This is actually not true. You've been able to trade online since I was a kid. In 1994, Charles Schwab created online trading, and I did it. Okay, so the person who really created and democratized the markets was Charles Schwab. It has nothing to do with Robinhood. Robinhood is a front for Ken Griffin and Citadel Securities, and they make billions of dollars off Robinhood customers and clients through the spreads. So what's a spread? Should we talk about that real quick?
I think that'd be a good segue. And also talking about just how Robinhood makes their money.
That's the spread.
Yeah.
So let's talk about it. So how does Robinhood make money? I mean, they have this new promotion. If you move $100,000 to Robinhood in an IRA, they are going to pay you 3% or $3,000 if you hold your account there.
Got to keep it there for 5 years.
Right. But if you don't trade, Robinhood will go out of business if they continue this. And that's why they only did it for a month.
And I mean, theoretically, if you're thinking about how an IRA works, you don't want to be necessarily
you don't trade your IRA
all the time. So if you were operating it in the correct sense, it would be a great way to make money off of Robinhood. But again, they're not going to make money from
100%. If I was a young person and I had a $50,000 IRA, I would move it to Robinhood. I'd take my 3% and I'd buy a couple ETFs and never trade them.
And that's what's scary though, is they're getting people to move their 50 grand IRAs into their Robinhood account where they already look at this like a gambling,
like play money.
Like play money. So now they're getting them to move their retirement into their play money account, which could be.
I think it's like kind of criminal because like if you're in your 20s and you have a $20,000 IRA or $10,000 IRA, and you start thinking about compounding tax deferred, or if it's a Roth IRA tax free over 40 years, okay, like losing $10,000 in Robinhood today is more like losing $1 million in the future. Like we can do the math and you know, tell you exactly what it is, but when you're young, the most powerful thing about investing is compounding interest. It's the idea of making money off your money year after year. So it's better to get a consistent positive rate of return than a highly volatile rates of return that ultimately don't do any better. Because unless you're buying low and selling high in the highly volatile markets, you end up losing.
Right. It's like that classic, there's a chart that we always show whenever we're doing presentations that it's like diversification never feels good. Because, you know, if you're in a highly risky portfolio and then it goes down a bunch and then you lose money, you know, usually your mindset is, well, I still lost money. You're not thinking I didn't lose as much. You're thinking I still lost money.
100%.
And then a risky portfolio goes up a bunch and, oh, I didn't make as much. It never feels good. But then when you look at the long-term results, it's much better not to have those large spikes up and down.
Well, especially because your emotions tend to create bad behaviors. Like you make financial mistakes, trading, selling low, panicking, being on margin, and then having your stocks go down. So one thing I really have to stress to young people is do not use margin. Okay, this whole concept of plying people now with really high interest rates, which is even dumber to use margin.
Yeah, but what's scary, Mia was just telling me this a little bit ago, is Robinhood's giving you a free $1,000 of margin.
So that's for gold members. So that's a whole thing. They're trying to get a bunch of people to sign up for gold members. Yeah, the gold member thing is like you're paying now $5 a month or whatever. Right, $5 a month or $50 a year, and then the first 1,000 that you have on margin is without that.
Yeah, this is exactly
so it's basically
how
encouraging,
casinos work.
like,
right.
This is how you should invest. It's not just like, oh, you have the option to do it. This is how you should do it because what's the risk?
And the craziest thing is that the SEC comes in and fines and punishes Robinhood year after year after year. There's no investment firm that I can think of that's paid more money in retail fines from their business practices towards retail clients. It's unbelievable how much money they've lost because of these illegal practices. So plying on people with free margin can't be legal. Like, it's like, who's in charge of compliance at Robinhood? So I've been doing this for 30 years, which is twice as long as both members of Robinhood have ever run an investment firm. And I've run investment firms through the financial crisis. I've run investment firm through .com and .bust, through 9/11, through COVID. You're going to have these periods of time that are extreme, and it happens rarely. But when it happens, it wipes out all the speculators. And this is what happens, is that everybody gets so excited that they're making money on their free margin, and they turn their $5,000 into $10,000 and their $10,000 into $20,000, and they apply more and more risk on. And then what happens? COVID comes around. Trump becomes president, decides to attack China. The world comes to an end. This, that, whatever. You don't even know what it's going to be.
Right.
You're never going to know because that's what a black swan event is. But it's part of investing. And then what happens is you get wiped out. So you spend 5 years accumulating assets and you just take higher and higher risk because you can't lose. And then something changes and you get wiped out. You go back to zero or negative even. And that's happened to so many young people in the last 3 years. So many young people have lost on fake crypto coins, on meme stocks, on all these kind of wacky trading ideas. You know, in 21, everybody's posting videos with their Lambos and their 7 screens. You don't see that today, right? All these people lost all their money. But if you're young,
unless you're someone who's selling a course.
There's lots of teachers, right? Well, I say if you don't have, that's one thing that I've gained. I'm not a big fan of aging, but you gain wisdom. And that's really the best advantage of being old, is that I remember everything that's happened in the stock market for the last 40 years. So I started investing when I was 13. So, and I was a professional when I was 23. So for 30 years, I've been doing this as a professional. 40 years I've been doing. So I can tell you what happened in 1988. I can tell you what happened in 1998 or 2008 or 2018. I can tell you exactly what was good, what was bad. And that experience makes me so confident that investing is actually so easy that these companies like Robinhood are just flat out scams. Because the best thing you can do is just buy a bunch of really good stocks and never sell them. And then when they go down and when that tough time comes, hopefully you have money because then you can buy more. And this is really how you make money in the stock market.
But to be able to do that and do that properly, you also have to build the foundation
That's
of, you know,
right.
budgeting correctly and like, where should I be
debt.
investing? If I'm just starting out on my own, you know, and I mean, we're different. We work at an investment firm and we were both studying finance to go into this field. But like, you know, if I'm just someone who's viewing TikToks online that are telling me to invest, how do I know how much to invest? How do I know how much to keep in my bank account? And, you know, what
Yeah,
are
how
the
much
right
emergency
moves
should I have?
you know.
So you're 100% right. You need to build a financial plan. That's one reason why you want to reach out to Jimmy and Mia and our firm is like we work with normal people. We charge nothing for our initial consultation, and it gives you a chance to like actually build a financial plan. And what that does is that when things get tough, it's usually the hardest time to invest because things are tough. But if you have liquidity and you're able to buy stocks in that period of time, that is how you really build wealth, like rapidly. It's actually buying when it's the worst time to buy, perception-wise, versus buying today when the market's at new highs. AI is this transformative thing. I'm paying full price for most of the stocks in the stock market. And I'm not saying not to buy stocks today. What I'm saying is that your risk reward, you know, balance is much different than when stocks are cheap than when they're expensive. So essentially investing is counter-emotional, counterintuitive,
Definitely.
and that's why most people aren't successful at it. It's not that the concept is so hard. It's actually doing it is really hard.
Right.
Okay. And so greed and fear are your worst enemies as an investor. Being too greedy when things are good and being too fearful when things are bad. And that's why an investment advisor can help you so much. And that's why Gerber Kawasaki exists. We're the only firm that works with young people. We're really the only firm. If you really think about the opportunity for somebody in their 20s and 30s to meet with a highly qualified financial advisor with lots of experience and really good track record and really get personalized, customized financial advice, there is no other firm that's working with the traditional young millennial Gen X.
Right. You don't have an
Gen
advisor that
Y.
you're bouncing ideas off of when you're trading on Robinhood by yourself.
Yeah, what happens
you know?
is these young people come to us and they say, oh, I was working with my dad's advisor and I told him I wanted to buy NVIDIA. And they say, oh, the stocks are too risky and this and that. And they're like, I don't want to buy NVIDIA.
We're like what's the bear story? Like there's too hot, too cold, just right. Like we have that mix of we're still going to look for the right stocks. We're still going to be forward thinking. Financial planning first though, and it's that right balance here.
Right. And that's why these meme stocks are so dangerous because like GameStop and AMC are troubled companies.
Right.
And the idea that people can trade these troubled companies and somehow make money just by catching the wave and buying and selling at the right time is actually impossible to do in any consistent manner. So like if you saw what happened last week, it rallied big time for 3 days.
Right.
Just when everybody got excited that it was going to go to 400, it plunged. Okay. Why? Because the smart managers at GameStop started selling stock to the public so they could get liquidity because they're going out of business.
And I don't think that's horrible to have a low risk.
AMC got $250 million last week. Okay. From meme investors. And GameStop just wasn't prepared to actually cash in yet, but they also announced a tender right after, a share issuance right after they rallied. And so these companies are just taking advantage of the people on Reddit who are buying the stock.
So
Right,
that's
like
how
the
the
story's being
companies.
flipped.
So that's how the companies take advantage of them. And then how exactly is Robinhood taking advantage of it? Because we talked about the bid spread, but like, where does their money come from? It's between that and then just more trades being placed. They make a little more each time.
Right.
Like payment for order flow.
Right. Well, payment for order flow is a fancy way of saying kickback. So they get kickbacks from Citadel. And so the way it works is if you're buying and selling a stock, typically it's a 1 penny spread. Okay, so there's no money being made there. So if they can squeeze 2 pennies out of you, then they send 1 penny back to Robinhood, and that's the payment or the kickback by charging a little bit more. Okay, so Robinhood people are like, oh, trading's free. And you're like, no, it's not. You just don't see the fee you're paying because you aren't on Schwab comparing prices of what you're paying for the stock compared to what Robinhood's paying for the stock. And the difference is a penny or two. And so most people don't think about it. But when you do the law of large numbers, right? So Robinhood wants you to trade. Yeah. And the more you trade, the more money they make. Now with options, the spreads are 10 cents. With ETFs, the spreads are 2 to 5 cents. That's why everyone wants to trade the ETF. So we have our own ETF, GK, and I look at the spreads and I look at NAV every day as it's going, and I can tell you they're making 2 to 3 times more money trading ETFs than they are trading stocks. So that's why the market makers want you buying and selling ETFs. They make more money. That's why there's thousands of ETFs. Make no sense, right?
Yeah.
With a lot of them in the same objective or basically tracking the same thing.
Right.
Too.
So then Robinhood goes out and says, go on margin. And now I get the interest off of you. I get the spreads off of you. I get the $5 a month off of you.
Oh, and also now that you're a gold member, you can also open a credit card with us.
Oh, that's the new thing.
Right?
Now we'll apply you a debt that's high interest rate too. Robinhood is literally destroying the finances of 13 million young people.
Like
people,
what
that's the biggest part right there.
Yeah.
So instead of it being like you know your APR on your credit card, it's instead 29. They keep it at a flat 29 the first time that you miss your payment, have a late payment, or don't pay it off in full, whatever. And then after that, it changes to 50. And I don't know if it keeps.
Gets
wait,
more
what?
expensive
And then I
if you
don't know if it keeps
payments.
increasing, but I know then if you go 6 months without missing a payment, then you're back to the $29 rate.
Dude, it's such a scam.
But
It's just so shady. So they're literally like a counter investment firm.
Yeah, but somehow they've gotten everybody into the market. Like they've done a good job with that.
They gamified trading. So they use the same techniques DraftKings and BetMGM use to get people to trade. And then because of the timing of the rally in 2020 and 2021, a lot of people bought into the markets and bought into Robinhood. And as I told you, the statistics are that half the people that opened Robinhood accounts 5 years ago have lost all their money. And that's crazy to me.
Yeah.
That's crazy to me. So if you go, like, what percentage of GK clients have lost all their money in the last 5 years investing with us? You know what that is? Zero.
If it's
0%.
all their money, no.
None.
Yeah.
None of our clients have lost all their money in the last 5 years trading with us. Why? Because we won't let them. We're not going to let you do these things. You call me up, you say, I want to take margin and trade options, and you're 25 years old and you got a $5,000 account? What do you think I'm going to say to you?
You're not
Get the fuck out of here.
This is not worth my time.
You're right?
Yeah.
Like,
We're
you
building
lost your
financial
mind. You got
plans.
$5,000. You got 10 grand. You go buy the SPY and you go back to work and you put money in your 401k and you come back when you got 100, 200k and we'll buy a few stocks. But like, what the heck are you doing? Aren't you trying to build wealth? Don't you want to be rich?
That's boring, though.
Now, let's talk about the stock market over the last 30 years. When I started in the stock market, the Dow was about to break 4,000. And I was like, wow, the bull market is 94. This new technology called the internet and email. Oh, my God, it's so great. Oh, Ross, you don't know anything. Go back onto your typewriter. I swear to God. I swear this happened to me.
You're aging yourself, typewriter?
Dude, when I started in the business, they literally yelled at me to get off this laptop thing and type the stuff on the typewriter because there was a typewriter.
Yeah.
And I refused to do it because we had to do it was like my insurance
we're
application.
older than Google, and one day it's going to be, we're older than AI too.
That's true.
Yeah.
That is true.
Exactly.
Now you're aging us.
Exactly.
Man.
So like one day you'll have kids and your kids will look at you and be like, you dealt with things before AI? And you'll be like, yeah, actually, I would search on Google.
Right.
Remember how I tell you the microfiche stories? You know what microfiche is? I talk about college. See, this is fuck, man.
No.
This is what makes this stuff so hard for me. So when I was in college, there was no internet. There was, but it wasn't really an internet.
Oh,
and so if you wanted to do research, you went to the library, and they had microfiche, which were basically like photographs of magazines and newspapers that were in reels and then cataloged in these massive rooms. So I'd want the Newsweek from 1985, an article about Boeing. Okay. So they go, okay, that's bin 36, aisle 17, row 4, box 7. So then you're walking around the library, half baked, like trying to find this thing. It's college. And then finally you find the drawer, and then you find the bin, and you find the thing, and you take out this thing, and then you put it in this massive machine that was basically a copy machine, and you'd scroll to try to find the article. Then you find the article from this photo, and then you push that's it, and it would print it. That was the process to get information when I started investing. That's how I would learn about companies.
Wow.
It was that bad. So you actually had an edge if you had information. That was sort of the angle at that time, was if I had better information, you actually did have an edge. Now you're going to go tell your kids one day that you used to search on Google and click on links.
We used to not be able to write essays on the computer. They wouldn't let us do that. Like,
Sure, you have to write it.
we had to handwrite it.
Yeah.
We still were the last generation, I think, who knows cursive.
Right, that's true.
You know?
Although they're starting to teach a little bit more, because I was super annoyed my kid wasn't learning cursive.
I love it. I use it all the time just because I write fast.
Well, and also, like, people should learn how to write. Like,
My handwriting's
all you do is
terrible.
type.
Yeah.
Right.
I send a welcome letter to all my clients. They know how my
don't know.
handwriting looks. It's not the best.
Well,
I've
kinda like my
I've
kids,
written
when
so
are
many
you
things
ty-
for
when are
Jimmy
you
and
writing?
Chase.
When are you writing, you know? So then I was going through these boxes in my garage because I had to try to make room for the Cybertruck, which I failed because the Cybertruck's too big. But I found a box of old letters, and there was a letter from a girl I dated in college, and it was like a 2-page letter. So I started reading it. My wife was there, so, you know, it was probably not the best letter to start reading, although it was like 40 years old, 35 years old. But it was like we wrote letters, like long letters to each other. And it's just a lost art. Nobody does this anymore. You've never written a
did.
letter to a girlfriend, like
Can't say I
a
have.
whole letter,
haven't?
right?
I cannot say I've written.
No,
a letter,
like on a
no.
piece of paper, like written a whole
Yeah,
letter
I have a whole folder of them.
that you've written, and you just like saved them. You're like,
And that have been written to me.
I'm breaking up with you, Steve.
Poor Steve.
Unfortunately, I'm not emailing you. This is a real letter.
Just so you could really.
Just
feel
so
it.
you can cry on my piece of paper. I don't know.
Wait, so you were saying how like back when then you had the edge with the information. Like if you did good research, you had the edge. What year do you think that went away? Like you kind of don't have that edge anymore. Everything's out there.
That's a great question. I think that for a long time, big firms had an advantage. The Merrills, because they paid a lot of people to do research. And so they would go to the companies, and what would happen was I would get those research reports from clients or friends of mine who had accounts at those firms. So like the firms spent a lot of money doing research because they were trying to sell people stocks and whatever. But getting access to that was very hard because it was proprietary research. And there was this thing called Value Line, and Value Line did research on the S&P 500, and they would send you these packages of information about each stock. And Value Line was great, except it was expensive. I think it was like $500. But when I was your age, I didn't have $500 to spend on research. So they had it in the library. So I would go to the library. This is a true story as well. And I would get the value lines, and they would be like these books. And then I would read. That's how come I know almost every stock in the S&P 500, like everything about it, because I would just read the entire value line. Like, so I would read every stock in the 500. So I used to play this game, like if all stocks are equal, just I should learn all of them. So I would try, like I learned all 500 of them. And I found out that 490 of them are crap. So like, you know, this is a waste of time. And the 10 good ones, the Microsoft, that's what I really got to know. So I think that's really a byproduct, because even when we started GK, none of this was that easy. Okay. Yeah. And I think the real aggregators of information like Google and Yahoo were really the first people to really get a lot of financial data aggregated that was free. And then I used to pay for Investors Business Daily. So that's so if you paid money, there was things like Investors Business Daily that did this data and research for you and had tools that you could use. And it was kind of expensive, but it was so good. And I still use Investors Business Daily to this day because their data and research is great. And it's a certain style. They're very much momentum investors and growth investors, which I like, but it's a great source of information. So I think if you were willing to go to the library and you were willing to put in the work, you could get information. It was just not easy.
Yeah.
Today, I go into AI, say, tell me everything about wires and cables and and which companies and this and that, and it's spitting up everything. I go into my Bloomberg, you know. Now, the Bloomberg is great, and they had it back then, but it was so expensive. It was like, I couldn't afford it, you know. So today, I think it's a huge advantage for investors that there's so much access to information, other than if it creates bad behaviors that don't allow you to gain wealth because you think every day there's a new stock you should be buying or selling.
Right. But that's another thing with just content that's out there right now, and a big problem with, I just think, financial education in general is the fact that the people who are able to make that content constantly and tell you what stocks to buy, they're not licensed, because that would be shut down so quickly. You know, Miranda is out there watching every single video that I put out for good reason.
Yeah.
So I
think the fact that unlicensed people give so much financial advice online is a real problem. And some of them actually give good advice. Like, I've looked at some of the influencers, and they're not saying bad things.
It's not that everybody is bad.
You don't have the industry qualifications to be doing this. And therefore, what you're saying may harm somebody by accident, because, you know, there's a risk here. Now, the second thing is, if that does happen, those influencers actually could get sued, and they don't realize they don't have insurance. We have E&O insurance and bonding and a firm and policies and procedures. But if you're just some influencer online and people lose money because of you, they're going to sue you. And that's exactly what happened with FTX, right?
It is part of
all
like
the influencers
disclaimer
got sued.
We say all the time, but like, it really is so dependent on your specific situation, you know, how much you should be saving and what you should be investing in. Like, if I have, same thing of when we meet with a client, if they're planning on buying a house in 1 year versus they're planning to buy a house in 7 years, their portfolios are going to look completely different.
Yeah, so let's talk about buying a house for a minute, because I think it's the hardest thing ever for a young person to buy a house today.
Yeah.
It's literally ridiculous. So the Fed has made it unaffordable with interest rates. Then prices never went down because people who have low rate mortgages won't sell their houses because they'll never get those rates again, and they don't want to pay 4 times more. And then property taxes in California, for example, when you buy the house, you have to pay current market value property taxes. Well, everybody else living down the street who's old, they're paying property taxes from 1985.
Right.
Okay. So it's super unfair. Young people take all the burden of taxes, have the highest interest rates, the highest pricing. It's literally impossible to buy a house if you're a young person.
I mean, and I think we see this because we actually do the math for these calculations, but I mean, the difference of what you can afford when your interest rate has changed so significantly. In 2021, we're talking about 3%, you know,
let's just
interest
use 3
rate,
as
3%.
a base. Yeah.
And now, you know, we're looking at 7%. If I could afford $1 million home in 2021, my affordability is more around $700,000 now for a home.
Right, exactly. So what you're doing is you're working backwards and saying, if my payment on $1 million loan would have been $30,000 a year, now it's more like $65,000 a year. That's a massive difference in paying for a home, right?
Right.
And so it's like, well, why is it like that? Well, the Fed doesn't want you buying a house. Now, aren't they supposed to be stopping inflation? So how does this stop inflation? By making things more expensive. It's actually counterintuitive, because the Feds are basically idiots, and I'm tired of them because they don't understand what they're doing to people. They think that they're stopping inflation by raising rates, but what they're not understanding is what they're doing has nothing to do with inflation. All the inflation we see in America is because the government's printing money and giving it to people. And it's like trillions of dollars in deficit spending. The inflation's caused by the government. The interest rates going up is meant to offset the spending and the giveaways that the government's already doing anyways. So they've created this really stupid economy where the government spends and gives away all this money, and then people who work and want to buy a home and support their families can't afford a home.
Yeah, it's fully like that goalpost is just moving farther and farther, you know?
So if you're basically a poor or lower income union worker, this is the economy for you, you know, because that's all Biden caters to. But if you're a young family trying to get ahead, everything's working against you right now. And why? Because Biden doesn't understand. He just doesn't understand. So if interest rates on a house is 6.5%, 7%, and who's really buying houses is young couples who want to move up and get a house, and then now they can't afford anything. And it's like, well, if they lower interest rates, what's going to happen? What's going to happen is more people could actually afford a home, and the prices of housing will go down.
Why would it go down, though?
Because the cost of the loan is less. So if the cost of the loan goes from $65,000 to $50,000 a year, the cost of the house goes down.
Yeah.
To actually what you pay, right? But the price will go down too. And you know why? Because people won't sell their homes today because they have a 2.5% loan, and they don't want to get a 6.5% loan for their next home. So it's just the market's stalled. There's no sales happening in LA.
No,
None.
I was on Redfin just before this, just because I like to pop in there and see, what's available.
I remember
Nothing.
those days. Yeah.
Nothing.
Well, there's nothing for sale because why would you sell your house if you have a 2.5% mortgage?
Right.
So what would you do? Like if you were the Fed, how would you fix this situation?
Well, the Fed has to say, well, what's inflation running at today? Okay, 3%, 3.5%. So there's actually a ratio of what interest rates should be based off inflation. And it usually should be a little bit above inflation. So if interest rates, you want to slow inflation, you want your interest rate to be a little bit above the inflation rate, and that will slow inflation. If your interest rate is below the inflation rate, that will increase inflation. So if we got 3.5% inflation, the Fed could go to 4% on the interest rate, and it's still restrictive. They could go to 4.5%. It's still restrictive. We're still at 5.25%. So they originally talked about these 75 basis points, and that's the correct number. They need to lower by 75 basis points. And what that will do will free up transactions for true market pricing to happen in housing. So now that person says, oh, I can sell my house. And now that person says, oh, I can afford to buy this house. And now pricing will be discovered. And what I actually think is more houses go on the market for sale, prices go down. Yeah. Right? The reason prices keep going up is because there's no houses for sale.
Right.
There's none. You want to move to the Palisades where I live, there's no houses for sale. Okay, there's a bunch for $23 million that are empty because a bunch of idiot developers that built. There's so many $23 million houses that are empty right now. It's insane.
I would definitely classify the area that I'm living in too as definitely a first homeowner, young families with kids area. I'm in Delray, which is
100%.
The neighborhood right behind Marina Delray.
Right, it's a great little neighborhood.
It's great little neighborhood, single family homes. There's just definitely, there was one house under 1.5 million.
Right, I was going to say the pricing there's probably $1.5 million.
2 months ago.
Right. It's probably $1.5 million to $2 million.
It's over though. Yeah. It's over $1.5 million.
Yeah.
And this is the neighborhood for young families.
Yeah, and they're older houses and they're nice lots and they're not big houses. It's a great neighborhood. It's close to the beach. That's part of the problem because it's it's kind of a good location. That said, that's kind of the entry level for a decent house in LA is $1.5 million to $2 million. That's just what it is. So you think, what kind of income do I need to make to own this house? Well, you got to work backwards. So your cost to own this house is going to be probably 6 to 7% of the value of the house, right? So now you're talking $10,000 a month in cost, right? So who can afford that? Somebody who's making $40,000 to $50,000 a month. Okay, so I got to make $600K a year to buy a house, a normal house in LA? Yes, you have to make $600K a year. So it's two people, a couple, each making $300K. That might work. But then you start thinking, so I got to find a spouse, or I got to date somebody who's going to make $300K if I want a house, or I got to make $600K. Well, you know how much a doctor makes, a brain surgeon makes? $600K.
Yeah, right,
so unless you're studying brain surgery, I don't know how you're going to make $600K. Now, fortunately, you're a financial advisor, so that might work for you. But for most jobs, making $250, $300 is good income. It's really good.
And that's hard to get that income. So it's like the people making $100K, wife making $60K, husband making $80K. Like, what do they?
They're renters. They're just renters
forever. Or is what's the plan?
Forever.
And so so those are the people who can cover the monthly payments, let's say. But before that, they had to have had good habits to be able to saving for the down payment too.
Well, let's talk about down payment. So you need 20% down. And if you're a new homeowner, you have to have reserves too. Actually, all homeowners. So this is the total scam of the bank.
Closing costs, inspections.
Well, we're not even talking about costs because it costs a lot to buy a house. Just with all that nonsense, and then you move into the house and the costs really start. So let's not talk about home ownership because it's really expensive. But that said, 20% down on a $2 million house is $400K. So I got to save $400K, and I have to have reserves of probably $100 to $200K. Okay, so I've got to have $500 to $600K to buy a house in LA, and I got to be able to support a $10,000 a month payment. Now, one option, which a lot of people do, is they put the ADU in the back and then they rent it. So maybe they've got another $1,500.
I swear, every client I've talked to lately that saving up for a house, we're looking for a single family with an ADU in the back.
Yeah, well, that's what we might do with our back house is just turn it into an ADU. It's really my garage and turn it into ADU because the permitting for ADU is nothing, but the permitting for anything else is forever. And so it's really advantageous to do an ADU. But if you have a property and you have enough room for an ADU, you almost have to do that to offset the cost of ownership. So if you're a young couple and you have an ADU in the back and you rented some old guy or whatever, and they pay you $1,500, then it offsets the $10,000. That helps a lot. But that's where the Airbnb got so popular. It's like, oh, I'll rent out my room for extra money, or I'll do this because it's just so expensive. Now, on the other hand, you can rent a house for, let's say, $4 or $5 grand a month and not have to worry about any of this stuff. And it's a decent house. You can get a pretty good house, right, for 6, 7, 8,000. So it's much, much better to rent right now than to own. And it's just substantially better.
And then I guess that's just in the times of high interest rates. So now if rates start to go down again, people in those positions can start looking to buy a home again?
Yeah, exactly, because the cost for ownership will go down every time the Fed lowers rates. So it's like, so then also there's a higher spread than normal with mortgages because of the perception that rates are going to stay higher for longer and because the Fed keeps talking up rates. See, if the perception was rates were really going to go down, rates would already be going lower on the mortgages. But what they keep doing is the Fed keeps coming out there and saying, oh, higher for longer, this and that. And what they're really doing is saying to Americans, screw you, you're not getting a house for now because we need the economy to slow down. And since Biden's just printing money left and right, what we're going to do is prevent you from buying a house.
Right.
That's the economy today. And then Biden's like, why is my approval rating so low when the market's at all-time highs and the economy's great and unemployment's great and wages are great? Why is my approval rating so low? Well, I was like, because I want to buy a house. I can't buy a house. I want to buy a car. I got a 6.5% rate. I got a 6.5% rate on anything. It's like my Tesla. My old Tesla's got a 2.5% rate. My new Tesla's got a 6.5% rate. I don't really want to sell my old Tesla. This is like, I'm just giving it away because it doesn't have equity anyways. And I'm like, I don't pay anything on the money.
But then if you bought, some of the new Teslas within the last month, you could have gotten 0.99%.
Exactly. But like, if I rent my Tesla out on Turo, I could probably make, $200 a day or something, Model S Plaid, and I'd probably come out ahead doing that if I wanted to be a car renter guy. But, the truth of the matter is those days are over. And any loan you have at 2.5% is golden because it's never coming back.
Definitely.
And I think that's good news. The idea that we want 2.5% rates, you don't.
Technically means we're in a bad economy.
We're in a horrible place if that's how we got there. But it just happened over and over again that we just got used to over the last 20 years, these rates being zero and money printing being normal and the government deficit soaring. And, this just became normal. Like, okay, we'll just spend on the COVID happens, just spend. Those days are over and the day of reckoning has begun because now the government is spending, 3% on average on their loans, then it's going to be 3.5%. And when you put that on $35 trillion, it's a huge difference. And now today, the government, as of actually this week, is paying more money on interest on the debt than for our military. So we literally hurt our strength as a nation because we owe so much money that we literally have to spend $800 billion a year just in interest.
Wow.
Yeah. So the good news is your generation is going to be responsible for this. All these extremely old people who run our country could give two craps about what happens to you. And that's so obvious in the way they run our country. It's just rigged for the older people. It just is. And it's super unfair. Like that we have to pay Social Security to people retiring at 65 today. Or 67, my full retirement's 67. Oh, now next at 70. And I'm like, wait, hold on a minute. People in their 60s are not old anymore. Okay. Yeah. So if the government can't afford to pay them, why don't they if they're moving it to 70 when I turn 65, why not move it today?
What are they waiting for?
Because they want to get reelected. So if they say, I'm moving Social Security to 70. I'm sorry. You're not that old. You're 65. You're not that old. We're moving it to 70 now, today. Social Security saved. Jimmy will now get Social Security. We'll save the entire system if we do it today. That's it. Simple as that. Bite the bullet, old people, baby boomers, sorry. You're going to have to wait 5 more years. Gen X, whoever. But we solved the problem. But they won't do that because it's better to punt it to the next election till I'm done, to the next election till I'm done, until the Social Security Administration's out of money. And what's going to happen when I retire is they're going to run out of money in 10 years.
For a while. That's why we don't plan
That's
for
right.
That's why we do not plan for Social Security when we're
taxes.
doing our calculations. If it's still there by the time that we retire, then it's an extra bonus, but we're not going to include that in
So here, I will give young people the most important financial advice ever. Okay? Write this down, kids. Okay? There's one lesson that I will teach you now that will change your life for the better. And it's called the Roth IRA. Get the money out of the government's crosshairs now. If you're young and you do your Roth IRA and you qualify for this stuff and you earn this money tax-free and you can take it out tax-free for the rest of your life, think about how much taxes are going to be in 20 years with the debt out of control and with our budgets out of control. Like we're going to have to pay this at some point. And then you got the baby boomers who are all super old running Medicare into the ground. Okay. Who's going to pay for all of this? Okay. It's going to be taxes. So taxes are the biggest detriment to your wealth creation over time. And so if you're not putting your money in IRAs and 401ks and Roth IRAs and you're young, it's the biggest mistake in the world.
Yeah.
I never thought I would be 59 and a half. I never thought. When I started, I was your age, and I thought that was a joke that I was putting money in an IRA at 23 years old. 59 and a half. I'll never get there.
I mean, I get laughed at by my friends all the time
Dude,
about that.
I never thought I'd be 59 and a half.
Talking about how cool it is.
Like how good a Roth IRA is.
No, but when you're in your 20s.
I started my Roth IRA when I was 19.
Yeah, but like when you're in your
That's
20s,
it.
let's say, and you're like, oh, I have a retirement plan for when I'm 60. People look at you like, who knows you'll even make it that long, whatever. And I'm like, now I'm staring at that. And I'm like, thank God I did that,
I think the issue right there is when we call it a retirement plan. Like, I think our generation needs something more fun than the word retirement.
So this is what I wanted to do, was rename it. There is no retirement anymore. Okay. The way I look at it is it's financial independence plan. That's what it is. It's a financial independence plan. The goal is to be financially independent as soon as possible in life. So you can do whatever you want to do. This is what young people want. Young people want freedom. And having money buys freedom. This is what I realized when I was 16 years old, that if I had money, I could buy freedom. I could do whatever I want. As long as it's legal, nobody's going to mess with me. I pay my taxes, I don't break the laws, and I have money.
Yeah.
And that's true. Always pay your taxes. So if you put all your money into retirement plans today, when you're young, and you invest it for growth, the results are massive in the future. But what happens when you get to be my age, now you're in your 50s and you're in the highest earning years, right? You're in the highest tax brackets. It's super hard to save because I got private schools, I got kids, I got a Cybertruck, I got this, I got that. I got a fence to build. Dude, a $15,000 fence. I'm sorry, you laugh. It's $15,000 for freaking fence. Steel and wood and the guys and this and that and trucking a bunch of dirt. I got to truck dirt. They're trying to tell me how much it costs to move dirt across a yard,
Oh, God.
Yeah, I don't even want to go into it because it's like you could spend all your money easily on your house, right? No, but so when you're in the highest tax place, you have the highest bills, you have your kids in school, and you got all this stuff, is not the time you want to start saving for your retirement or financial independence. What you want to do is you want to build financial independence in your 20s that you haven't when you're in your 30s. That's what I did. By the time I was 28, 29, I had enough money. Now, granted, I started in the 90s, so I got ahead quick, but I had enough money. I was set for life by the time I was 28. Now, it doesn't mean I stopped working or whatever, because I obviously wanted a better lifestyle than my 28-year-old lifestyle. But I was like, dude, as long as I keep saving, as long as I keep doing this, as long as I use my retirement plans, I have financial independence now. I have peace of mind now. And that's what I say to young people. Take the steps now, today, to build these financial independence plans. And that's what I think we should call them.
I like that for sure.
Financial independence plan. It's a Roth IRA. It builds financial independence because you can actually get to this money earlier if you need to as well. For sure. Just like my 529 plan for my kids. It's financial independence for them. Because the worst slavery I hate to use that term. The worst burden that people have when they're young today is college debts. So many young people, like even at our firm, have so much that they owe. It's a huge burden. So you come out of college owing money. That was never before. College is the biggest ripoff I've ever seen.
That could be a whole episode in of itself.
I mean, not to mention
right
now is a horrible time for recent college students to get jobs, even coming into the job market.
Well, you have a tough job market, and God forbid you go to one of these schools that nobody wants to hire from, like the Ivy Leagues that I went to. I don't want to hire Ivy League kids. They're a bunch of soft, confused children,
That's why we go with the SCSU Aztecs.
You do also have to think about the kids that are coming out of college right now, they're a year behind Chase, so they started freshman year completely remote. They had 2 years of in-person college.
Dude, they're all
Can you
confused.
imagine how much that would stunt just your professional growth and knowledge too?
Yeah, but also dying of a pandemic would stunt your growth. And remember, a lot of college kids got usurped by a thing called World War II. So somehow those kids did really well who went and fought in the war and came home and missed college and then went to school after. So yes, I agree, but I also disagree. I think there's a generational issue here. So I agree that it's affected them, but I think that this generation is the least able to deal with adversity of any generation I've ever seen. Literally, people melt down when their pet can't be treated like a king on a plane. Like I've never seen more people love their pets more than your generation. They used to be a dog. Now it's a person.
I feel like I'm not the best one to speak on.
No, you're guilty.
This is
as
at
all.
you.
And why is this happening?
Harley lives a great
dogs
life.
Are people, you know?
Dual income, one pet. What is it again?
Yeah,
dual income, no kids.
one pet.
Yeah, one pet, no
Dude,
kids.
you see the homeless people over there in the tents? They have pets.
Yeah, pets.
Dual income, no kid with a dog. Digwad.
I honestly, I laughed the other day because this homeless guy, he's setting up his tent. He's got his dog. He's got his brand new bike. I wonder where he got it from.
Might have been the one that.
He's like, they all have the same deal. And he's setting up his little water dish for his dog and all this stuff. And I was like, dude, really? You're homeless and you're like caring for a dog.
It's almost, I'm shocked the animal society's allowed with that one. Or they're okay with that.
The dog looked great. The dog was in great condition, groomed, looked wonderful. The homeless guy looked like crap. I can't explain it. It's just unexplainable to me.
And Petco still can't go up.
Like in my generation, people were like crackheads and they killed people for money. That was what happened. So like if you wanted stuff, you just killed the person and took their money. That was a big problem in the 80s,
It's a little different.
Yeah, there was a lot more crime back then.
Now Harley's got pet insurance and talking buttons, so she can tell me when she needs a little more
And don't you have the food thing?
You want to reach out? Yeah, give her a treat right
remote
now.
food treat?
Yeah, the Furbo, so I can watch her from
God.
afar and toss her a treat if she,
This is why I don't have a pet, because I could never justify any of it. I'd be like, go out in the yard and go find your own food. It's a dog. He'd come home with a rat. And I'd be like, good job,
I would
dog.
prefer her not to bring rats into my house.
Yeah, but I prefer the rats not being in my house.
She did see a rat once in my old place in Santa Monica, and she ran away from it.
Okay, well, first of all, that's a great use of pets is killing rats, especially cats. Rats are. You probably have rats in your building. I'm sure you don't know this, but cats are good for that.
I'm in a house now. We have skunks in the backyard.
Well, skunks are actually nice animals if you don't piss them off.
Yeah.
Yeah, I like our skunk. We have a skunk too. But one time,
You have a skunk.
yeah,
We got a couple.
I got an owl, I got a
skunks,
skunk, and I
over
got a
here.
team of squirrels. That's for sure. The squirrels.
There's a lot of squirrels out here.
Squirrels run the place.
That was the first thing I noticed when I moved from San Diego to Santa Monica is the amount. There's thousands of squirrels like everywhere here. I don't know
No,
why.
when I moved into
Tree
my
rats.
house, the squirrels came to the front door and they were kind of like, "You're the new person here."
We're just checking
and
in.
they're like, "Can we have the food inside?" And I
Oh,
said,
they're not
"No,
scared of anybody.
You can't
The
have
squirrels
the
in
food
LA,
inside,
I
but
swear to God, they have an
you're gonna have to hunt
attitude.
on your own. But I won't kill you." And so they never bothered me again, and they stay outside and whatever. But they came to the door the first day to see if I would feed them. Yeah,
checking.
for sure. They're like, "Oh, you're the new guy on the block. You feed us or not?" I was like, "I'm not feeding you, so you go find your own food." And they do. The squirrels are so smart. Not to mention they can jump large distances off these high trees, like really ballsy squirrels. I have to say. All right, let's get a few more
Going back
questions.
to college, I just think that young people have a really hard time with debt right now. Not only is it you come out of college and you immediately have debt that you're making payments on, but then there's also the new services like buy now, pay later.
Buy
that
now,
have
pay later,
greatly
right?
Affected young people.
So what is buy now, pay later?
Well, I mean, you make a big purchase and you have, no interest on making these payments over a set period
So
of
what
time.
is that?
Interest-free credit card, essentially? Or,
Yeah,
Yeah,
it's
it's a
basically
loan.
the new credit
Yeah,
card.
it's a loan.
Yeah, it's a loan.
debt.
But for a while, it didn't count against your credit score.
Yeah,
too.
that seems like a scam,
Which
doesn't it?
100% seemed like a scam, and now it's like starting to be
They're like,
considered as
oh,
part of your credit
what
score.
happens was young people stopped paying the buy now, pay later, and then
Right.
they're like, "Oh, this really is credit because if you don't pay."
But again, it's going
It's a
back
bad loan.
it's going back to habits, and it's making people think that they can afford more than they actually can, and
Well, it's the same
make these
scam
big
as
payments.
the credit cards used to have, like no interest on the first 10
First 6 months, and
6 months.
and
It's the same idea.
I mean, there are people
Redisguised.
who can use these correctly and be, very
Yeah.
smart financially.
Right. Like I'll give you an example where this can work well. Like for example, like my wife we need a new mattress, and buying a
Mm-hmm.
new mattress is painful because they're very expensive, and you don't replace mattresses often.
Right.
And you can't sell your mattress. It's like once you use a mattress, it's done. So, I'll go to Bloomingdale's and they're like, "Oh, it's anywhere from $2,000 to $8,000 for a mattress," let's say. But they have a Bloomingdale's card. And they say if you put it on the card, you get 10% off, and then you have no interest for 3 years while you make payments. So I buy it on the Bloomingdale's card, and then I make my payments for the 3 years on time, and I pay no interest, and I got 10% off because I used their card, and then I close the card. That is good use.
Actually, I want to ask a question.
Zero interest rate.
Is it bad to open? I've gotten this question a lot from some clients. Is it bad to open like a Bloom, like you said, the Bloomingdale card, open a Macy's card, open an Amazon card, and like use it for some certain purpose and close it? Like,
Yes.
is that not good?
Yes. So the way credit cards work, so when people say, like, why does this affect my credit score? Because it's a credit score. It's not a financial score. What it's saying is, how do you do it with credit? Because other lenders are going to look at this and say, like one time I was trying to get a loan for a house or car or something, and I had some cable bill that I had missed, and it was like $7. And I had made the payments every other month, but I missed this one month for $7. And then they were like, oh, you missed your payments. And I was like, that was an error. But like, because I didn't fix it, it was like on my credit score is like a missed payment. You see what I'm
Right.
saying?
Yeah.
And it brings down your credit score. So the best thing you can do for your credit score is pay all your bills on time, because that gives you the best credit, right? And then secondly, credit score is based off available credit and used credit. So when you're young, you have no credit, and it's very hard to buy anything. So you go to buy a car, and they say, well, you don't have any history of credit. You can't buy the car. Your dad has to sign. This happened to me when I was 25. I go to BMW. I'm thinking I'm making all this money. I'm stoked. I go to the BMW. I buy this new Beamer. I'm stoked. And they go, sorry, your dad has to sign. I go, what the hell? Here's the money. I don't want to call my dad.
Right.
Like, I'm a big boy now. It's a different generation. Okay? And as this generation calls their dad, no problem. Dad comes down. Oh, I'll buy you the car. My generation, I was like, I don't want my dad finding out. Like, this is me. Like, I don't want to talk to my dad about this. And they just wouldn't sell me the car unless he signed off on it. So finally I called my dad, and I felt so lame, and he was like, no problem, son, whatever. Because he knew I had the money. But I was like, I could write you a check for the car right now, and you won't loan me the money without my dad signing.
Yeah.
Right.
It's like, whatever. So credit score. You have a credit card, you have $10,000 credit limit, you pay it off every month, then you have great credit. Okay. Then you get two. So what you really want to do is have 2 or 3 cards that you open that you don't put anything on, that you don't use. So what happens is you expand your credit, but then the amount you use is small, and that improves your credit score. So the more credit you have that you don't use, the better your credit score is, actually. So I have 3 or 4 credit cards I basically don't use. Now they do try to get you to use them because they don't make money if you don't use them. So it's good to like throw a few transactions on there a year
That's like
and
I
pay
have
them
my
off.
Alaska and Southwest that I don't really use.
Right.
But I get some perks from,
Right.
flights and whatnot.
But
And occasionally I'll put a flight on there, but
Exactly.
I mainly use my Chase.
Right. And so like you want to try to use a credit card that gives you rewards, like this Capital One. Like I forgot about my Capital One rewards, and I looked
Right.
yesterday because I was like, actually I was doing tax stuff. And I was like, I have $2,000 of Capital One rewards, and you can redeem that for cash. I was like, I don't need to buy stuff.
Is that taxable?
I think it is.
Yeah, I would assume so.
Yeah, I think it is. I don't know how they get around that.
Yeah.
Because I don't
Well, I
think
mean,
I got a
high yield
1099.
savings accounts are taxable.
No, but this
With
is like
interest, though.
when you redeem a reward from a credit card company for cash, because I know at the company we put it on our financials, so we pay taxes on it. But individually, I don't think I get a
I'd be interested to see how
I don't
going
know.
back to
Or like I buy
Robinhood.
like an Apple computer with it.
Maybe
you can-
because it's
Well-
not cash that you get, it's a credit to your statement.
So you know
then
how
they can get around
Robinhood's
it.
doing
I
it
don't
with
know.
their credit cards? You get 3% back, and it doesn't have a limit. Also, I think for the credit cards, but instead of it going,
Yeah, it's not
to
cash
your
you get.
It's not cash
Oh.
you get. It goes into your brokerage account.
Yeah, see, then I would think that it's got to be a tax consequence for that because you're getting a benefit.
technically it's interest,
Right.
but not interest, but it kind of is. I don't know.
No, it's interest, right? You're
Yeah.
getting something for it. And so that's an interesting thing. I don't know how that works with the IRS because I know I don't get like a 1099 from my credit card company. But I redeemed this thing. I had $2,000. I was like, this is just free $2,000 because I was going to buy the stuff anyways, right?
Right.
And so you want to use a card that has good rewards. And then you want to have 2 or 3 other cards that you basically don't use or you use once or twice a year and you pay them off. That's what you want to do. But if you do the Bloomingdale's card, now I did close this Bloomingdale's card because I have 4 other credit cards anyways that are empty. But like if you see, I learned this the hard way. I did the same thing when I was a kid and I closed the account and then it hurt my credit.
Right, but
Yeah.
so then if there's credit cards that don't have the annual fee either, and you're not using it anyways, it's kind of like
Well,
put it
if
in
they
the
have an
drawer
annual
and
fee,
leave it.
you should get rid of that card.
Exactly,
Right,
but if
yeah.
it doesn't,
Yeah.
and you're not using it anyways.
Yeah, I think there was that Chase Sapphire that all the
That's one I have.
was that the one that all the young people signed up for that had all those great benefits originally, and then they like ended it pretty quickly. And I don't know if they have a fee on that card, but you have to watch out because a lot of times you get these benefits and then you actually aren't using them, and then you're paying a fee. So American Express is a perfect example of this.
Mine has a fee on my card right now, but it has great travel benefits
Right.
that I've actually
if you're
used.
using it, right? So like American Express costs $600 or
And mine
whatever,
is
the
the
platinum
Chase
card.
one.
But I use the benefits on the
Right.
platinum card, and in many cases I've gotten way more than the 600 and whatever.
Oh, I
it
take
costs.
advantage of
You get
pretty
Uber,
much all of
streaming.
the.
You get
The-
upgraded at a hotel once, and it's wonderful.
The airport lounge there.
Yeah, well,
Essentially.
airport lounges suck now, but yes.
They're busy as heck.
Oh my God! It's like it used to be like, oh, this is so nice. Now it's like just another place to sit. That's why I have private suite, which is like beyond this belief.
Right.
One day you could take me there.
Yeah, I'll take you there one day. It's great.
I'll take it.
When
Yeah.
you two go on a trip together?
Yeah,
We will. He's going to make the company trip this year, and
Heck yeah.
that's my plan. Both of you.
let's do it.
Yeah, we have a new release form though that everybody has to sign. It's called the Mike release form.
Well, since this was the Robinhood episode, and I have two more questions
Yeah,
that
let's
I
go
want to ask
into it.
about that. One was basically, why can regulators just halt trading? How that's is that not shady? They can just halt trading.
No,
Are
no.
you talking about like 2021
there's
when
Some,
they,
like on
No,
this last week
no,
with
it's just-
GameStop, they got
Oh, I
halted
see,
like
I see.
9
they
times in the
halted,
morning.
they halted
Right.
GameStop. So what happens is okay. So there's market halts where the New York Stock Exchange or the Nasdaq halts trading, and then there's in the case of like in 2020 when Robinhood just ran out of money and then told you couldn't buy the stock or
Yeah.
whatever. That was an anomaly and that was a crime, and one that the regulators went after Robinhood for because they screwed their clients to protect themselves and stay in business. Robinhood should have gone out of business that day. So Robinhood made a calculated decision to screw their clients and stay in business, and that's what they did. And they stayed in business, and a lot of clients left, but now clients are coming back. Okay, so that was probably smart for them that day. They survived, and a lot of firms don't survive. It happens. So I think with when you look at a market halt, there's usually two main reasons this is happening. So if you think about a stock market, the idea is you have buyers and sellers. Now, in the old days, we had these things called specialists. And a specialist was in between buyers and sellers, and they were market maker firms like Citadel or whatever, but they all had these posts in the stock exchange. And a specialist's job was they worked for the exchange and they would trade against you. And the goal was to cut volatility. So when all these people would start buying a stock, the market makers themselves would sell stock out of their inventory so that the market wouldn't move so much. Because the idea was that the specialists ultimately made money on the spread, like a penny a share, but they wanted to smooth out the volatility of the stock market. Why did they do this? Because it was a better market. Because human behavior is such as like everybody wants to buy all of a sudden, everybody wants to sell all of a sudden, and then you get lots more volatility and bad price discovery. So the specialists played a very important role in the markets up until technology put them all out of business. In the last 10 years, maybe 15 years, the specialists have all gone. Now you go to the New York Stock Exchange, what you see is a set for CNBC, a set for Cheddar, a set for Schwab, and you see a couple of the electronic trading firms on the floor that are renting space just to look cool, like Virtu has an office on the floor and they have their computers out there, but they could be anywhere. And then most of the posts are all digital now. And so most trading is done digitally matching buyers and sellers, especially small transactions. So now the specialists are all gone. They don't do that anymore. They're not buying and selling out of their own account. Now they're just facilitating trades. So we have higher volatility than we've ever had in the stock market. And so what happens on these GameStop days is all of a sudden you get flooded with buy orders. So there's no specialist that says, I'm going to take in $1 billion of this because these guys are idiots, and then I'll sell it back to them in 3 days. You see what I'm saying? And the specialists all did very well because just betting against humans is a very profitable business, just like the casinos. So the specialists always made money because they were just betting against humans, and the humans are mostly wrong. And so the specialists would just take the other side of every trade. That's what they did. and it was just a hugely profitable business. And then it died as the spreads went down and down and down, and the computers took over, and then we didn't need the specialists. Well, the problem with that is we don't have somebody covering the other side of the trade now. So what's happening is now GameStop gets tons of buy orders. Let's say for $1 billion of stock, it's a $6 billion company, and there are no sell orders. And so what happens to pricing? It just keeps going higher. So all of a sudden it's like, wait, GameStop's now trading $12 above where it was yesterday because there's basically no sellers and all these buyers. But that's not actually a good market, because then all these people buying up here are getting screwed. Because then it collapsed 2 days later the minute sellers showed up. And then all you had was sellers. So you could see in GameStop in 1 week exactly the problem of not having specialists. It like notched up one day. And if you notice, it does that on the open because people are dumb enough to place orders overnight. So they don't even know what price they're going to get on the open.
Robinhood has 24/7 trading now.
Right.
What is that?
So it's just a stupid idea, because you'd have less price discovery and less accuracy. And then when the market opens at 6:30, it takes 30 minutes for them to clear all the trades between 6:30 and 7. There's actually no real stock market till 7 in the morning on the West Coast. Between 6:30 and 7, they're settling trades. The best time to trade in the stock market is at the end of the day, not the beginning of the day. Okay. Why? Well, because the function of the stock market is to settle trades and make money on that. And so the first actions it does was settle trades from the night before, settle trades from overnight trading and whatever, and institutional trading in Europe and whatever. And then you get these like, oh, stock's up $5 to start the day or whatever. And you're like, oh, what's going on with GameStop? But then at 7 o'clock, there's much more natural trading. And then you'll see the stock either drift back lower because now they filled all the buy orders and some sellers come in and take advantage of it. Or it still trades around that price. It just depends on buyers and sellers. But you get a pure market. So when you have extreme volatility because of these kind of situations, the exchange doesn't see that as good for clients, because the people who actually buy the stocks at these high prices usually lose. So they halt trading until they can get a market of buyers and sellers and true price discovery. Okay.
But I feel like that's kind of, it says it's protecting the buyers.
Yeah, that's what they're doing. Yes.
But if buyers were still able to outbid each other and keep buying up, wouldn't that make GameStop continue to go up? And then maybe somebody obviously at the very top is going to get screwed. But why do we even have intervention? Like, let it go to the top and let it come back down.
Because it's a stock market. Okay. What is it? You ever go to like a flea market, or like you go to Pasadena and it's all the people selling stuff out there. And let's say you go to the flea market and you're the only person buying. What are the sellers like?
Desperate.
Yeah. And they're like, I'll discount this. Normally it's the hats for $5. We'll give you 2 hats for $5, right? Or it's like you go to the farmer's market. At the end of the farmer's market at 2 when they're packing up, that's actually when you start shopping. Okay? So I do this psychology on the farmer's market. If you shop at the farmer's market when everybody else shop, you don't get any discounts. But they don't want to truck all the fruit home at the end of the day. They don't get anything bringing a bunch of oranges home.
Yeah.
You don't think they have plenty of oranges there? So you go at the end of the day, and I buy my wife flowers. They have all the flowers. The flowers aren't even going to last. So they're packing up at 2, and I'll say, I'll take this whole bucket for $10. They give it to you.
Yeah.
They give it to you because there's no other buyers. And just the same, if you have a situation where everybody's trying to sell, and there's no buyers, you get price down, right? If you have all buyers, you get price up. Why would you want to buy something when all you have is buyers? So you ever try to do that where there's like 3 pieces of rare fruit and 50 people want to buy it? You ever go to
I've never thought of it about it as fruit. I'm thinking more Black Friday sale and every shopper is there. I think that's more.
I'll give you an example for women because I saw this once. It's a sample sale. Yeah. So my wife took me to this sample sale for this great brand downtown once because she's like, you got to check this out. And I don't know how I got suckered into this experience, other than I've never seen so many women undressing voluntarily in public. because it was like really good brands, and it was like this rare sample sale, and there was a line out the door of just women waiting to shop because everything was like 50-75% off. And I go in there, and it was like a frenzy. It was like a shark frenzy.
I feel like sample sales are really where it still happens because Black Friday is basically switched to online.
And Black Friday is a scam now. It's like there's so many.
But before,
days.
think about like it was, you line up at Best Buy.
That's right.
The night before.
Right.
You camp, you run in, you grab that
TV. Yeah.
You're running to the front. Like I did that with my parents. We waited outside of
and
Old
they had
Navy.
10 TVs that were like $300, so you
Right.
like ran. Right. But see, that's a perfect example of a supply and demand imbalance on the other way. You got all these buyers, you got some good pricing, but in general, it's just to get you there. But then you're like running, and like people like fight at Walmart every Christmas. Now that stopped thanks to online. So that's one of the great advantages.
Right. Amazon, in my opinion, is going to kill Black Friday, and they already have kind of, but with their whole purchase of the NFL games, they have a Black Friday game now every year. And while you're watching it, commercials you can buy now.
I'm telling you, my wife's in retail, wildling.com. The psychology of selling around Christmas has changed dramatically. So there is no Black Friday anymore.
Yeah.
Okay. So the way it works now is everybody starts a week before Black Friday. And so Black Friday doesn't mean anything anymore. Okay. So everybody starts a week, and they count Black Friday as the whole week of sales up through Black Friday.
Right.
Because basically, if you wait till Black Friday to have your sale, everybody's spend all their fucking money now.
Yeah.
It's crazy.
It's crazy.
It's crazy. But it's a perfect example of the perception of deals that bring in lots of buyers.
Yeah. I mean, Amazon creates their own Black Friday by doing Prime Day.
Yeah.
So the stock market is supposed to be a market, like a flea market, where I can go up to a post and buy stock in any company in America that's public, and I should have proper price discovery and valuation. So on a typical day for a typical stock, you have thousands of intelligent people trading these stocks and valuing them based off all the information that's available today. And most stocks, I'd say about 80 to 90% of the stocks in the stock market are valued correctly. You're buying a stock for what it's worth. There's no outsmarting anybody. There's lots of people looking at NVIDIA. The valuation of NVIDIA might change dramatically throughout a day or a year. But right now, NVIDIA is trading for what it's worth. Okay. And if you want to sell the stock right now, you can sell it. And if you want to buy the stock right now, you can buy it. And I could argue it's cheap or expensive. Yeah. Okay. When GameStop, which is $10 a share and going out of business, goes from $10 to $50 in 2 days, that's a broken stock market. That's a manipulated stock market. That's somebody maybe committing a crime, what we call pump and dump. So maybe Kitty's in on this thing with Ryan Cohen, because Cohen still never sold his GameStop, and he's eating doggy doo on this thing. They lost $75 million last year, so he maybe wants to get out. Kitty posts, and then he can dump his stock. And that's exactly what happened. That GameStop started dumping stock, but it was GameStop stock because Cohen doesn't want it to go out of business and he loses all his money. So it was a pump and dump. And so the markets have every incentive to go in there and say, hey, hold on a minute. What's really the true value of GameStop? There's no advantage to young people paying $50 for a $10 stock, okay? Because it's worth $10. So you can say it's worth $30 because people are buying it because it's on Reddit. It's not. It's not.
Yeah.
It's worth zero in my mind. GameStop doesn't need to exist.
That doesn't change what it's like if you go to a GameStop today.
That's right. And it doesn't change that there's nobody in the GameStop, and it doesn't change the $75 million in losses, and it doesn't change that GameStop will go bankrupt one day. It will go bankrupt. I'm in the gaming business, and I have been for a long time. Nobody goes to GameStop to buy games. The only thing they sell are used devices and used games. And that doesn't need to exist. So GameStop doesn't need to exist. At least with AMC, I can say theaters need to exist.
Yeah.
Okay? And how Adam Aaron took $20 million in salary last year is just mind-blowing to me. This guy is such a shyster,
Seems like there's a lot of shysters in these industries.
There's a lot of shysters in business.
And they're just using the people, the democracy, I guess you say.
Did you see the Nicole article today about Trevor?
Oh, man, I forgot.
I thought that you were going to bring up
trying to not go to jail, and he's still trying to manipulate. No, he's convicted, but he's on appeal.
Wow.
So he's not in a jail cell right now.
I mean, there's even shady things happening with Red Lobster.
Red Lobster is a troubling thing that I am looking into deeply right now.
A shame for American society.
I was gonna post this. Something's fishy at Sizzler.
So,
At Red Lobster.
I don't know. And now I'm hungry. Are we going to lunch?
I'm kind of hungry too.
What time is it? Are we done with this show yet?
it's right. Yeah,
You know,
we're coming
is it
up,
a shell
Have we
company that's
helped enough
running
people?
Red
I mean,
Lobster? There's a bunch of puns you
So
can
let's
make.
do a summary for our audience today.
Yeah.
So really what we've talked about are a couple really important points for young people. Number one is don't get into debt, don't do margin, don't do what Robinhood's telling you to do. Number two, trading doesn't work. Investing for the long term does. Number three, it's harder than ever to be a young person and get ahead. So if you don't have a financial plan, it's going to be extremely hard to get ahead. And my prediction is that we're going to see wealth inequality just continue to grow and grow and grow in our country between the haves and the have-nots, based off the people who invest and take advantage of the massive growth in AI and technology in America and global growth, and the people who just don't. And it's going to just be this massive wealth differential over the next generation, probably bigger than anybody can imagine. It's going to create some interesting social problems too as we move forward. You know, the people who want unions and communism because they don't have any money, and then the people who save and invest and get ahead are going to say, "What are you doing?
Yeah.
You know, you had your chance." You know. And then we talked about, I think, the advantages of using tax advantage plans and planning when you're young, making smart moves that will save you on taxes a fortune in the future, and how fast life does go by. And then I think, most importantly, I think we're trying to help young people avoid many of the pitfalls that happen, some of which are not your fault. So I think a lot of it is you can't blame yourself if there's all these industries trying to get you to go into debt, trade and gamble. You know, everything is sort of like
Working
trying to get your
against you
money
a little
away
bit
from
right
you.
now.
And they do it in a
Right.
really pretty way. They make it look really nice for you to screw yourself with.
Totally.
It's
And lots of perks on your way to poverty. And you know,
perks on your way to poverty.
yeah, listen, you get to Robinhood this and your Robinhood that. But I think that would be something that I think people should really be paying attention to, is that a large percentage of Robinhood clients end up with nothing. And, you know, I think that's a big concern. And just the same, if you're young and you got 30, 40 years of compounding in front of you and you see what's happening in technology, and you can invest in technology today, in the next decade, you know, be financially independent.
Millionaire, multimillionaire.
Yeah.
Like that's
Yeah.
the secret to it right there.
I think it's one of the most exciting periods for investing that I've seen since the 90s. And I'm excited about it because I was sort of like, what's next? Social media is dead. Social media sucks. It's killing our kids. Nobody wants their kids on social media anymore. You know, what's the next big thing? Like, what is it? And now it's obvious what it is. And so it's like, how are you not investing in this? You know, you should be. And if you contact Gerber Kawasaki and you meet with Mia and Jimmy or one of our advisors, and you sit down and you put in some time and effort, 1 hour, 2 hours of time into building a financial plan with our team, what you will do is create a great future for yourself. Because I think the opportunity today to do that is better than I've seen it in many, many years. So this post-COVID era, and I always thought this was going to be the roaring 20s, and now we've got the technology innovation to make it the roaring 20s, and now we've got rates going to come down over the next 3 years. We've got the economy strong, and if we can get some peace and love in the world, boy, markets could go way higher if we end the war in Israel and Ukraine. Oh my God. War is very bad for markets and very bad for building wealth, and so there's no... people ask me sometimes, there's no greater correlation to a bull market than when wars end. So if we can have lower rates and get some progress towards peace in the Middle East and in Europe, you know, the upside is unlimited at this point. And so, you know, pray for peace. It's real good for investing, and it's real good for humanity. But I also think if you're a young person, there's going to be lots of volatility throughout your life any way you look at it, and you still want to invest.
No, I
Invest,
couldn't
don't
agree more,
gamble.
and we're here to help. And, you know, if you have questions, please reach out to us. You can DM us on our socials, all at Gerber Kawasaki. Follow us on our YouTube channel. We're going to keep doing these types of episodes, you know, talking more so about financial planning. So we want to hear all of your questions.
Yeah, so let's talk money.
Invest, don't gamble. That's the key.